Basis is your starting point for gain or loss. Most of the time it's cost, plus certain buying costs, plus capital improvements. But the EA exam loves basis surprises, like getting property for services, selling stock when the broker doesn't show basis, and stock splits that change basis per share without changing total basis. If you receive property as payment for services, you generally have income equal to the property's fair market value. That same amount becomes your basis. Here's the exam twist. If you and the other party agreed on a service price in advance, that agreed amount can set both the income and the basis, even if the property's FMV is different. Think barter. A CPA bills $400 and the client pays with an antique vase worth about $525. If both parties treat the $400 invoice as the agreed price for the services, the CPA reports $400 of income and the CPA's basis in the vase is $400. On the EA exam, don't automatically grab FMV if the facts give you an agreed-upon service price. For securities, basis usually starts with what you paid, plus acquisition costs like broker commissions and certain settlement fees. When you sell, you'll usually get Form 1099-B showing proceeds, and sometimes basis. But if the 1099-B doesn't show basis, you still must report the correct basis using your own records. The form doesn't control the truth. Here's the scary part. If you can't prove basis, the IRS can treat it as zero. That turns the entire sales proceeds into gain. On exam questions, if they mention missing records, missing basis on the 1099-B, or taxpayer can't substantiate, your antenna should go up for the zero basis result. Now stock splits. A split does not create income and does not change your total basis. It only changes the basis per share because the number of shares changes. In a 2-for-1 split, you double the shares, so you cut basis per share in half. The exam loves asking for the new per share basis after the split. Example, you buy 100 shares at $50 each. Total basis is $5,000. Then a 2-for-1 split gives you 200 shares total. Your new basis per share is $5,000 divided by 200, or $25 per share. Same total basis, different per share basis. If they give you any split ratio, just spread the same total basis over the new share count. Which of the following items does not decrease an asset's basis? Choices include the cost of defending title to the property, Section 179 deductions, a casualty loss, and a manufacturer's rebate. Think about which one actually increases basis instead of reducing it. Think about it. The correct answer is the cost of defending title to the property. Legal fees to defend or perfect title are capitalized, so they increase basis. A tempting wrong choice is the manufacturer's rebate because it feels like income, but it usually reduces the purchase price, which reduces basis. Marisol received 500 shares of restricted stock from her employer on March 1, 2023. She forfeits the stock unless she completes 5 years of service. On March 1st, the stock's fair market value was $15,000. How much does she include in income in 2023? And what is her basis in the stock? Think about when restricted stock is taxed. Think about it. The correct answer is that she generally reports no income and has no basis until she completes the 5 years of service. The stock is subject to a substantial risk of forfeiture, so it's not substantially vested yet. The tempting wrong answer is income and basis of $15,000, but that would apply only if it were vested now, or if an 83B election were made, which isn't mentioned.